Okay, we're going to hit the ground running here. My name is Michael Leidick. I am one of the head honchos here at backtothefuturetrading.com. We have been in existence for nearly 12 years. We have thousands of customers all over the world in every major financial market, ranging from American through the European markets, Asian, South African, Australian contingency. We love you Aussies, by the way. Kiwis, you too. We have customers as far north as Fairbanks, Alaska, as far south as Argentina and Brazil, Central America, down under, of course. And we are thrilled to be here with you today. We are the premier source of predictive trading tools applicable for futures, Forex, as well as equities. And we accomplish attaining your trust in our product and in our company by giving out the times and the dates in the future when we expect certain moves to occur in certain markets. Then we come back together several days, several weeks later and analyze what actually took place at the times we were waiting for things to occur. And in a few short moments, we'll have a chance and an opportunity to review what actually happened at the times that we gave thousands of traders today an opportunity to evaluate on Tuesday night. Now, for those of you following at home, the settings that we're using today in our software in the look back search is a 714-21-0 with a swing strength of 8, as well as a selection of calendar days. Because of the recent holidays, we need to add the extra date to look back and acquire at least 2 weeks worth of data. Stand by 1 second. Templates, drawing tool. So if you're following along at home this week, we're using a 714-21 look back with a swing strength of 8 and a choice of calendar days. We're also here today because we believe that markets as a whole are rigged. We believe, and that's a very, I was just thinking to myself that that's a very overused word. It's an overused word in terms of what's been spoken about politically. We're not talking about politically here today. We're talking about on an institutional level, the idea that there's a plan for the market you trade long before you set foot in it each session. There's this idea that somebody somewhere knows what the moves are likely going to be that day, where they're going to trap traders with stop runs, where they're going to move markets in a large run up to a high. This idea that somebody knows something that we don't know. And this is, of course, is at the heart of trading. Trading is ultimately, if you're thinking about it, here we go, what will happen in the future, right? Trading is ultimately an exercise in what will happen in the future. And when I ask people who come to us, people who haven't used a predictive tool before, if trading is analyzing and essentially betting on what will happen in the future, why are you using lagging indicators that do what? Measure the past or what already happened. That's my question today. And so I haven't really earned enough trust with you at this point in the webinar to ask that question. I don't know why you'd trust me. I haven't shown you any proof yet that this is real, but I want always in the back of your mind to remember that after 12 years, a webinar a week, about 50 webinars a year, that puts me well over 500 webinars and classes like this. I'm fairly confident by the end of this session, you'll see into a world that you thought might have existed, but now we have proof for it. Now we have a tool that you can apply predictively in futures, Forex, equities, cryptocurrency, commodities, bonds, notes, whatever you have a data feed for, we can apply this tool to. And on your computer in your time, not connected to us in any way, shape, or form, you can learn and discern what institutions potentially have in plan, in store, waiting for you in the future. Now I have to stop at this point and just take a moment to say, hey, Melissa, what's going on? Otherwise, it's not a webinar. Everybody welcome Melissa. She's awesome. And thank you for sending positive energy and wonderful thoughts her way. She definitely could use them. And there's no better, more deserving a recipient for them. So when you're rubbing your Himalayan salt crystal later, send a few positive photons her way. We appreciate that. So what is it that we do? He says, hello, Melissa from down under, with the horrible Australian accent that I fronted right now. We are in the business of shining giant spotlights on when banks are likely to do shady, shifty things. And there's no better example than the one we've been publicizing lately on our Facebook page. If you were with our webinar last week, you remember that we've been tracking Tesla now for several weeks and months, in fact, predicting the dates in the future when we could expect certain moves. We were especially proud of the one on October 20th, as well as the run-up on November 6th. You see, the times that are waiting for us in the future on the chart, calculating when the banks are likely to push up or push down in the future. We have an understanding out into the future when the next bull runs are likely to begin and when the next bear opposition is likely to kick in. So in this case, we're watching predictively in the future for December 22nd to arrive for a possible bull run in Tesla, a possible buying opportunity. And as we work our way forward into the future, the software is declaring that there's evidence for a potential downturn on the 20th of January. And so these dates wait for us in the future as a living embodiment of caveat, beware. There is a landmine here. And so the last signal on the 6th was particularly exciting because at that point we had the announcement that Tesla would be potentially admitted to the S&P, and the market ran up $209 from the low of the close of that daily bar candle. Now, we listed earlier this week that there would be a potential sell-off on the 7th of December. Have any of you been following this? If we go back to our Facebook page, I want to call your attention to the reminder that we sent out alerting everybody that something nefarious was on the way. And as we blow this up, I just want you to see right here, sell alert. We've got a predictive sell time on Tesla. We've been watching for this signal now for about a month. Time to potentially tighten up stops or take some profit. And we clicked on this video right here on the 7th, this screenshot rather. And then if you've been following the news lately, this is what I love most. James, can you read the headline? Tesla snaps back from a random, sudden sell-off. A random sell-off. It's out of nowhere, Richard. It's out of nowhere. How could we have known where that sell-off was coming from? And so that's just one example of a signal that we alerted people to and warned them, hey, there's some funky stuff about to go on between the 7th and the 22nd. And if you look here, the price, the share of the stock has fallen from that alert, $75. That's quite a bit based off of a predictive signal taken from the analysis of the Tesla stock. Well, it's not just Tesla stock that we've been talking about. For those of you that have been following along with me since April of this previous spring, we've been waiting for and predicting the movements in the E-mini S&P on a daily chart. These are opportunities for longer-term swing investments, buy and hold, and or options opportunities with calls and puts. And the very last signal that we told you guys about was the 12th of November. And as of the 12th of November, we had an opportunity to look for opportunities to the buy side until December 7th, very similar to the Tesla pattern. And if we were able to measure how high the market actually went from the close of the first day to the close of the last day, we have an approximate $158 move, which, if you're trading with a full-size contract, is somewhere in the $5,000 per contract range. Also an opportunity for a call. And so when we look here in the close of that day, what I want you to observe is what took place between the time of the signal and the end of the run. This is the window that encompasses all of the price action, James, from the time of the predictive signal till the end of the buying window. And I want you to observe that in that span of time, the market did in fact go against us $14. So approximately 10% of the overall move in heat or adverse excursion in relation to the $158 run. Now, we came upon the 7th in the ES. We've been watching for that for quite some time. Now I want you to also see that the market has been steadily moving down approximately $50 to the downside since that move. We've had a few days, 1, 2, 3, and now the 4th day. What's unusual about this pattern, or somewhat alarming, is that in relation to the prior 1, 2, 3, 4 blue moves, you'll notice, Melissa, that there are 2 potential patterns that form at this point. Either a consolidation pattern like we saw on the 27th and the 6th, which are all about the same size. Or James, what's the other possibility? The other possibility seems to be when a hook starts to form, the ES begins moving down. So we have some insight into the possible move. And we'll put kind of A over here and B over here. Based on what's been taking place since the 7th, Ian, what do you think is likely to happen in the next several days into the week? Is it going to follow a pattern A formation, consolidation, with a bounce back and forth between the range here, approximately how far? Let's go ahead and take a measurement. The size of the range is approximately $68. Yeah, about a 70. Will it be in a $70 range? Or does it start to appear more like pattern B where it's dropping with a hook formation? Yeah, sure. So it's likely, based on what we're seeing here, to follow this hook formation where it's already starting to drop and fall down. So we've seen a substantial enough drop where market analysts have taken note. And so if you look here, these were the last 2 dates. Again, we've known about them since April, that we were watching for these down moves. And so there's something very unique about this. If you look at the size of the move, from the high to the low, we have a triangle approximately that big. And then we'll copy and paste that one over here. And Ian, do you notice how they're identical in size? Well, we now have two possibilities, right? We have a consolidation range that's approximately this big, in which case we're at the bottom of it right now. Or, Ian, there's a possibility of what? This. A move down into the 3,500 area by the 18th of December. So there are low risk opportunities here to purchase at 36.47 to 36.50, or longer term put options bring us down into the 3,500 area on or by the 18th of December. Yeah. So knowing that coming into this now, we have a good idea of what banks have planned for this market for the next, where are we, the 10th, for the next week plus 1 day or so. So that's another market that we've been following. We can also take that analysis and bring it over to any type of other stock, including popular Robinhood stocks like Alibaba. And we can get a sense for what we've been waiting for. So if you were with us last week, we knew that the 10th of December rather, was an opportunity for us to look for selling pressure into the end of the month. So for Alibaba right now, we're seeing a consolidation pattern, and we've already started to see a small hook to the downside. And so when we look at the past selling pressure signals, we see there have been some substantial movements. So we're in a selling pressure window now from the 10th until the 29th on Alibaba. We can also apply this to other stocks, popular boutique stocks such as Apple, and we'll see that same opportunity right here is sort of closed off now from the 7th forward. We can check AMZN, and just typing in the different features, we'll see that we can have a heads up in the future as to when a signal is likely to occur. Any questions about the ability to look at larger time frames on the Warp software? So here we see, as far as the euro US dollar goes, we had a buying pressure signal on the 13th. We had another buying pressure signal on the 3rd in the direction of the trend. And now we're coming into the 9th. The 9th is a selling pressure window. We're watching now for consolidation. If the market breaks above the 22.57 level, that'll be an opportunity for a breakout to the upside. We can check other pairs as well, including the AUD-USD, and scan these markets to see when are the opportunities to purchase. In this case, if you were following the trend with the Australian dollar, we would be watching for a crossover here, a long entry on the 25th, the 3rd of August. There would have been a stop out on the 21st of September, a long opportunity on the 28th of October and the 13th of November. And now as we come into the breakout zone right here, we're watching for a puncture purchase long in the Australian dollar as it breaks through this stop line up to and including the 21st of December. So we can analyze any instrument on a large time frame, including Bitcoin futures, just changing the contract. When we were watching this last week, if you guys remember, I mentioned that we were looking for selling pressure on the 23rd of November into the 16th of December. The 16th of December is the next buying pressure opportunity in Bitcoin. And if there's any indication of the potential size of the move, we can simply replicate what was happening back here on the 2nd and prepare for that. Wherever we are by the 16th would be an opportunity for us to look for another launch, perhaps into the 22,000 area if we pull back down into the low at this point. So the opportunity right now is somewhere between 21 and 22,000, depending on where we land by the 16th. Hi, Eunice. Brian can connect with you and answer that question. The difference between tachyon prime and tachyon warp is a question of functionality and accuracy. So in our product line, a lot of people wonder, what do I need to purchase to be on the ball and in good shape with what I'm trading? Tachyon Prime is a very basic entry-level time analysis program that works with futures and Forex on an intraday time level. It starts at the 1 minute time frame and goes up to about the hourly time frame. Warp, however, works on all size bars from 5-second bars up through daily and weekly bars, as well as tick bars, range bars, Renko bars, volume bars, and the like. It works on futures, Forex, equities, commodities, cryptocurrencies, whatever you have data series for. It also has an accuracy of approximately 12 to 15% higher than Prime. And today, Eunice, I'm going to give you an opportunity to purchase Warp for the price of Prime if you can hang out with me for about 40 more minutes. I'll tell you with a promo code how you can get started using the one over the other and not feel like you've made a sacrifice. Yeah, I agree, Ian. So we can do a lot with the daily bar patterns on the markets that we've looked at so far. One of the things that I want to talk to you guys about, and we'll look at a couple different opportunities, is whether or not you can trust what I say on Thursdays. And one thing that I'm very proud of as a vendor now going on 12 years with close to, we have thousands of customers. I think we're somewhere in the area of 2,000 to 3,000 at this point. We're able to publish the times in the future and give you a sense of what to expect at those times in the future, and then come back together and see if they work. So many of you received an email with a link to this web page. I'm going to put the link in your GoToWebinar chat box so you can see that's there. And as I scroll down, you'll see that we gave out the histogram forecasts for all of these different markets 2 days in advance, for Thursday and for Wednesday. Someone had asked me earlier about the euro currency futures. And so I just wanted to bring this chart up real quick and compare what you were seeing to what actually took place. I'm going to draw on the screen here real quick. We'll choose a yellow tool with a pen. And I want to point out, can everybody see here where it says 10:03 and 9:33 and 10:30 and 10:45? I want you to look over here where it says 9:33, 10:03, 10:30. Hey, Eunice, how did we know when the euro was going to be pushed up and down 2 days before it actually happened? How did we know when 80% of the moves, 90% of the move times I gave you in the future, Darcy, actually produced a move after the fact? This is how we gain your trust, and this is how we show you and expose what institutions are doing to you and to your money while you're trading. These patterns are in the past records of the markets that you trade. Banks don't want you snooping around and sniffing around and looking and discovering for yourself that there's a plan. They want you to believe that it's random, that these movements that occur had no basis in reality. There was no way to know when these moves were going to come. Here's the equivalent in the currency pair itself. And if we go back to the web page that I gave you a link for, you'll see that I actually supplied the times to you for the euro US dollar in advance. This is the largest market, Eunice, that I can give you the times for in advance. Do you know that? Miss Baba Aziz. There's no larger market in the world. We're looking at billions of dollars traded in this currency And so when I give you these times, you have to appreciate the courage involved, because I know I have to face you all 2 days later. And I wonder, when I do this every week, will this be the week that it fails? Will this be the week that the banks change what they're doing? And after 12 years, I can tell you, coming back 2 days after I gave you the signals in advance, look at the percentage of times that actually produced a move that we were anticipating. And we'll just pick the lowest hanging fruit, like the move at 9:30 into the high at 10:05, like the move at 10:35 into 10:45, like the move from 10:45 into 11:45, the move from 11:45 into 12:35, the move from 1:10 Eastern into 2:50. Now at 2:50, it puts in a very small hook. We're kind of into the end of the day, so I won't even include that one. Let's just put a right there, and we'll put a right here. We were off 1 bar at the 8:30 signal. If our signal was there, it would have looked like this. We're off 1 bar. So the question was asked, how do you trade those signals? We adopt a trend trading strategy here at the company because most of the customers who report being net profitable say they do so by following the trend. So on the instrument, you'll see that we've applied a 120 period exponential moving average. This 120 period exponential moving average changes colors to let you know when the slope is up and when the slope is down. So when the slope is up, Eunice, we're advising our customers to follow in the direction of the trend, which in the euro was in what direction today? That's right, it was in the up direction. So when it's in the up direction, we're paying attention to the buying pressure signals, because these are the moments in time, Eunice, where the banks are throwing gasoline on a raging fire. And so if we work our way from right to left, you'll see these were the windows of time where we were advising people to look for movements. So on the close of the 9:30 candle, we would have entered long and held that signal until the opposite signal at 10:05 for a 48 pip move. We would have entered the candle at 10:35 on its close and exited at the opposite candle for a 10 pip move. We would have entered at the buying pressure predictive time and exited by 12:35 for just a 4 pip move. And then we had another nice run up between 110 and 250 that afternoon, which was another 20 pip move. And then Eunice, there's one more here at 3:45. It's a little baby move. We'll just go ahead and throw that in there so we can see it. But Eunice, we're looking in the direction of the trend to find opportunities where the market may be pushed again. My question for you is a really simple one. How can a system that gives you the signals 2 days in advance show any potential profits, especially with such a basic trend setup? That's my question to you. If what I'm saying isn't true, how did any of this play out? How did any of it play out? And as we work our way back into the past, you can see that these are not the only days these things happen. As I work my way back into the past, Eunice, we could just as easily have sold short yesterday. And then we could have bought long the morning before. And then we have more short signals. And then as we work our way back, you can see that the times on the euro dollar days 3-4 days ago are still not random. There are still movements where we can intercept the signal in the future and take an opportunity to go long, or intercept the signal in the future and have an opportunity to go short. We had a really great example of this on the E-mini S&P yesterday. So Eunice, E-mini S&P American futures will kind of pull this over. It was how many of you had anxiety yesterday with the massive sell-off? There was a lot going on there, right? Well, let's add it up. Following the same system, from 7:15 to 7:45 was a $4 move. From 8:18 until 8:33 was a negative $1.50. From 8:57 until just before the open was a $4 move in your favor, but then it came back and hit our stop level, losing $1.50. We then have an opportunity right here when it closes above the moving average to go long. Unfortunately, at that point, our stop right below the crossover candle is taken out. So in that example, Eunice, we're not doing too good at this point in the morning with a negative $2 move. So we're +4, -3, -2. We're negative $1 on the session. But then something starts to happen. There's a rumbling. What's happening? What's going on? And from 10:03 until 10:24, we have a $3 move. From 11:03 until 11:48, we have a $3 move. From 11:57 until 12:30, we have a $1.50 move. From 1:03 until 1:33, we have a $10.75 move. Eunice, do you see how the profits start adding up potentially when we're following these time signals? Moreover, we know when the signals are coming, so there's less anxiety, there's less worrying and wondering what will they do to us next. And so all the way up to 3:30, we have a net total of points. Let's add them up. Using a signal that was 24 hours old, we have +4, -5. Now here we go. +3, +3, plus $1.50, plus 10, plus 7, plus 8, minus 4.5. That's $27.75 times $50 per contract, and we'll give that a 10% whack for slippage and commissions. It's around $1,250 per contract, using a signal that's designed to tell us in the future when banks are likely to do something. Remember that we had that information sent out to all of the people on the mailing list that aren't customers already in the ether. It was out for everyone to examine. And so the E-mini S&P logging in some potential profit there using those times. There's a really good example of what took place today in CL. So Eunice, I'm not going to add up all the signals here, but would you say, quick glance everybody, was crude futures today a random market or one that had a plan? Did somebody somewhere have a plan coming into crude futures today? Or was it just a willy-nilly, who knows what's going to happen series of movements? You see, I get a little excited when we talk about this. I get a little excited because some of you have never had a truly profitable experience, right? You always feel like somebody's looking over your shoulder. Somebody's placing trades when you're placing trades. They're watching over your shoulder. They're watching over your shoulder and they're tripping out your stops, and somebody is standing in your way. You ask yourself, how can 9 out of 10 of my setups go to my stop? You ask yourself, what if I just trade the opposite direction of what I think it's going to do? Maybe then I'll make money. There's a reason for that. We call it the golden rule. You guys know what the golden rule is in the markets? Let's see if I can find it. There's the golden rule. Aren't you tired? Aren't you tired of using the tools that everybody who loses money uses? Aren't you tired of listening to the guru in the fake beach house with the fake trophy wife with the fake Maserati that he doesn't really have, telling you what he did on his magical monitor that nobody can see? And if you just give him another $500,000, $5,000, $10,000, $20,000, he'll show you all the keys to the universe in a special 2-day class down in West Palm Beach where you get a finger sandwich and a chicken wing. Aren't you tired? Isn't there a way to expose what these guys are doing? And as you work your way backwards in Crude, you'll see that there is a plan. Every day, there is a schedule of movements in the European session, in the American session, day after day. Can anybody see what happened yesterday in the crude inventory report? 10:30 Eastern, every Wednesday, more or less, they tell us what the price of oil is based on because of how much we've got stored. Eunice, take a look. The report is released at 10:30. Everybody, look. 10:30. That's the bar just before the report. Hey, Ian, did somebody know how much oil was in the tank before the report was released? I'm no scholar, but boy, it sure looked like somebody had a plan, because I gave you that signal when? Tuesday night. That's the answer. And we can prove it. All we have to do is go back to the page, go back to the signal. Here we go. Wednesday, CL 1-minute chart. We click on the chart, we blow it up. There's that signal, Eunice. You see it? 10:31 to 10:35. 10:31, 10:35. And then all of the signals for the rest of the day. I have a new customer who said, it's impossible to trade crude. Crude is impossible. It's too whippy. There's no way to know what's going to happen. Was there no way to know what was going to happen? That one movement alone, from here until the end of that signal, was worth $650 per contract. And as we work our way out to the higher time frames, it's not just the 1-minute chart. Look at the 3-minute chart today in crude futures. And this might be a good place to ask and answer questions. I gave thousands of people an email 2 days before this was sent out. 2 days before this market. And if you scroll down and we look at the CL 3-minute chart, I want you to compare with me the times where stuff took place. 9:39, 9:39. 10:18, 10:18. When's the next long entry, Eunice? 10:30, 10:30. When was the high supposed to come in? 10:54, 10:54. What about the signal right after crude opened at 9:09 and 8:51? 9:09, 8:51. How did we do this? How did we do this? There's a point where you start to get numb to the complaints. I'm not making money, I'm losing money, I'm constantly losing money. Well, why are you using lagging indicators? Oh, well, Michael, I've bought so many tools in the past. I've spent so much money on tools and indicators. Okay. And then they get to this, and they see what is statistically equivalent to Jesus walking on water and then bending over with a cup, filling the cup with the water that he just walked on and turning that water into wine. This is a miracle, a modern technology miracle. There are 12,000 lines of code in Warp that work for you 24/7, no days off, no holidays, no time and a half. And all this software does is look for signals and tell you in the future when somebody is about to screw you and take more of your money. And on average, every year, probably 200 or 300 people say, Michael, I would love to sign up. But you don't understand, that other guy, he burned me really bad. Okay. So does that mean you stopped looking? Does that mean you've stopped trying? Does that mean you're never going to be successful and you might as well just use the garbage tools that you bought? I don't know. I'm asking. Any questions at this point, or any markets that you'd like to look at and analyze while we're all here together? We've got time for a few of those analyzations. I'm happy to look at them for you before we tell you how you can get the software and what's included, how we train people, and how you can start tomorrow knowing what signals to watch for in the future. Okay. One of the other markets that we had signals for was the E-mini NASDAQ. I know a lot of you love the NASDAQ. And if we look here at the signals that we gave out, I want you to see what would have happened if you trade the NASDAQ and you knew in advance what times to watch for moves, right? So when the NASDAQ opens at 932, the market fell approximately $58. It came back to its original point, and so we would call this a break-even trade, right? Because we're not going from $58 plus to negative. At 942, we have an entry until 952. It's a $47 move. From 957 until 1001. From 1022 until 1027 is our first sell-off. And then we have another opportunity at 1037, exiting at 1041 in the direction of the trend. Another entry at 1046 into 1053. Another entry here is the resultant stop out. The last signal here going into the lunchtime is from 1112 up into 1135. And if we bring our calculator over using one filter, the trend line, and signals that were 2 days old, we have $1 plus 47 plus 6 minus 15 plus 17 plus 17 minus 13 plus 20. Enter times $20 per full-size contract. Again, if you divide that by 10 and you have a micro account, you have $159 per micro lot, and then you have a $1,500 day. Okay. We also had signals in the DAX. We pull those up, James, we can look at European markets as well. Those times were published. Let me see if I can find it here. ES6E, CL, NQ. I don't know why it's not pulling up, but we'll just change the instrument. So James, here were the signals in the DAX today. We'll go ahead and stretch it out. We'll go back into the Euro session, 2 a.m. and 3 a.m. These were the signals then earlier in the morning in the Asian session. You want to look at the bonds? Okay, Douglas, we'll take a look. ZB 1220, and we're going to go up to a higher time frame on the bonds. What contract are they now? Doug, forgive me. I'm sure they're not the 12 based on that. Are they January or February? Thank you. Here we go. Okay, so James and Douglas, these are the signals for bonds. I do want to show you something that I found interesting. Let's see if it plays out here still. I was working with a new customer yesterday who we had a new set of settings for the bonds. And Doug, I found this setting worked much better. We'll come down to a 5 on this. So if you're trading bonds, one of the things that I want to encourage you to do is use a look back of 3 days. So Doug, I don't know if you have the software. If you don't, when you get it, these are the settings that I'd like you to use. A swing strength of 5, and then a look back of 3 days. And apparently, and I didn't know this until yesterday, bonds are on a 3-day cycle. They're on a 1, 2, 3 day cycle. And so when we do that, Doug, every signal is essentially 72 hours predicted. And you can see the times in the future that we're waiting for these movements. And so I wanted to give you a perspective on that. The conventional default value that I use in the webinars actually isn't the best value for bonds. What are the money management profit loss strategies recommended for each trade? So Andrew, we have an indicator parameter in the tool. For example, if we come back and we look at the 320 signal right here. Andrew, can you see that dotted white line underneath? That dotted white line is a measured distance of the average true range away from the low of the candle. And we call that the volatility stop. And so right here on the screen, you'll actually see the ability to alter the size of that gap. So view, zoom, 400%. And on all the charts I've been showing you today, I've been using a multiple of 1.25 times the average true range, the 7-period average true range. And so when we're looking at the setup now, Andrew, I'm watching that as a stop level. So from 320 until 330 in the bonds, I'm looking here and putting my stop just on the other side of 1.25 ATR values away. In terms of recommendations, we have customers that are aggressive and customers that are conservative. An ATR value on the vol stop of 1.0 is considered aggressive. Okay, an ATR value of 2.0 is loose. That's pretty wide. So I recommend customers use one between 1.0 and 1.25. Let me show you the difference between that now on our NQ. So as the market is speeding up, Andrew, the required risk also enlarges like a pair of sweatpants on Thanksgiving. And then as the market starts to slow down, the distance from the candle to the stop line decreases. And so the risk reward built into it when the market is moving faster and we have the opportunity for larger movements, that stop level is subsequently larger. When the market is slowing down and the opportunities to make profit are weakening, that stop distance is similarly getting smaller and smaller. Does that make sense? So in the case of an example of a trend trading system, we find that in a trend trading model that the expectancy of the model is somewhere around 50%. And then the profit factor is somewhere in the neighborhood of 1.5 to 2.0. And so I have examples of that from systems that we've back tested here in the past. File, open, run, breakdown. This is an example of a system that we studied on the E-mini S&P on a 3-minute chart using warp signals in the direction of the trend. And I'm going to blow this up, Andrew, just so you can see there are quite a few tests here between 3 and how many setups did we look through? It's over, it's about 900. So 900 executions on this example. And you'll see here that there's a positive expectancy for the model. However, the thing that you're interested in is over here. Again, this is a hypothetical backtest, right? Just for, yeah, so over here, let me blow this up. And you notice the number, the profit factor right here is 1.5, and the percentage win is a 55%. And Andrew, that's pretty good for a trend trading system, which is usually in the 40 to 45% expectancy on the trend following system. But that profit factor there, you're essentially winning $1.50 for every dollar that you lose 55% of the time. And as we kind of work our way through, Ron likes to parse out, this is the Asian session by itself. So if you were able to just trade the Asian session, not the Euro session, you can see here that the profit factor rose to 1.77, up about 20%. And the win-loss ratio, the expectancy was still in that 55, 56% range. So using that type of a ATR-based volatility stop, it's a little more advanced than I wanted to go today, but I wanted you to see that we understood the kinds of questions that you're asking right now. So Andrew, did that satisfy your question, or did I not go deep enough? Oh, you're welcome. You're very welcome. Well, hey, we again, when you look at ZB, I wanted you guys just to remember that if you're using ZB or bonds, please look at a 3-day look back, a 3000 with a swing strength of 5 on the 10-minute or higher, because the 3-day look back on bonds it's really quite impressive. When we blow it up here and shrink it in, you can see that it nails a lot of those movements and gives us a pretty good heads up when things are coming and happening. So remember, moving into the future, as we pull this over to the left, we are the only company that I'm aware of that tells you the times to the minute in the future to expect the moves. Everything to the right of this dotted white line is a move that we're waiting for, is a move that someone is planning, that someone has in store for you. It is a landmine that you are likely going to step on tomorrow and Monday and Tuesday that has been meticulously laid in front of you. And my hope, my goal after 12 years and a 4.7 out of 5 customer rating now is that you will now trust us when I tell you that if you're trading with lagging indicators in a market where 90% of people lose 90% of their account within the first 90 days, you are a Tom Hanks dead man walking on the Green Mile. You are a Christmas card to a broker. Dear broker, here are all my commissions. Thank you. And what a fun time we've had. Dear Goldman Sachs, when you distribute your bonuses this Christmas, please tell your wives that we worked really hard for this money. And when we watch the Lexus commercial with the big bow on the roof, we're going to be sad, but we know that all of our dollars went to good homes in your driveway. Sincerely, Losing Trader. Or I'm going to go out on a limb here, or you can follow our strategy. Our strategy is a simple one. We believe that the people who push the markets are worth studying. We believe that sometimes you have to follow someone else's morality. You have to sell when Goldman sells. You have to buy when they buy. If you know the enemy's timing, you are not surprised. You're calm. You have a plan. You have a trading plan with rules. You have your setup. I wait for the time. If the conditions at that time are what I want, a volume spike, a fib retracement, an order flow analysis shows a trapped bunch of traders. We're at a support or resistance level. We're at a market pivot. If all of those things are occurring at the time that you're watching, now listen to me, your stops are smaller. It either works now or it doesn't. And your targets are larger. I have 5 minutes, 10 minutes, 20 minutes, 4.5 hours for this trade to develop. Not because of my gut, not because of some guy in a room with a British accent who doesn't know his you know what from his elbow, not because of some obscure invisible notification service, but because the historical data tells us what the movements and machinations of these maniacs are likely to be. And you watch that trade develop, and it goes, and it goes, and it goes, and that voice in your head that says, I better get out soon. I haven't had a winning trade in 19 years. If my wife finds out I didn't take profit now, I'm going to get in a lot of trouble. And it goes, and the system tells you, you got 16 more minutes, Bill. Go get a sandwich. Go walk the dog. Watch a little Golden Girls while you're out there. Let the sun shine on your face in the front porch. You got 10 minutes left. What are you doing? Walk away. And you come back 5, 10, 20 minutes later, 2 hours later, you're up bigger than you've ever been because the software told you this was coming.